What's up guys, it's your boy BaloTrader here. Nice to see you all again. In this new video we will talk about picking and finding the perfect entry point for the deal. But before that, we will do a tech analysis of our first pair, which is Australian dollar to Canadian. We will invest in the price drop after the rollback. Let's switch to the broker and open a deal for 100 with 3-minute expiration time for the price decrease. And back to the trading view. At the beginning of the day, after a sharp increase, the price continued to move in an oblique bullish corridor. Further, you can observe how the activity of market participants has grown. First, the buyers, which led to a sharp increase, and after, the sellers. The price collapsed to the previous positions. After the trading volumes leveled off and a flat formed, at the end of the flat you can see the build of sellers and the beginning of the price collapse. Therefore, we entered the fall and further breakdown of the level. Let's go back to the broker. Basically, entry points are positions on the price chart where you open a position in binary option trading. These points can be identified by analyzing technical indicators such as moving averages, support and resistance levels, and trend lines. Based on technical analysis, you determine the entry point into the deal in order to get the maximum profit. Finding an entry point is as important as technical analysis and emotion control. There are several ways to find entry points, and the method you use might depend on your trading style and preferences. I'll tell you about the simplest and most accessible ways to find the perfect entry point. But before that, for those who are watching me for the first time, I want to tell you about my open Telegram channel, where you can find all of these tips about entry points, patterns, indicators, and as well as participate in trading together with me, and easily raise your profits starting from $500 a week. You will find a link to the channel in the description or in a pinned comment under the video. I'll be glad to see you all there. So the first approach is thanks to technical analysis. Using only a chart and technical analysis in which you build levels and lines of support and resistance, you can already mark all of the entry points. Having determined the current movement of the chart, you're already building its further movement. So it is not difficult to find the entry point. For example, when working with the trend movement, the best entry point is near the trend lines. In the lateral movement, it is optimal to open a deal at support or resistance levels. But no one will prevent you from opening a deal at levels or lines. But it is important to include an understanding of the expiration time, and I will talk about it in a little later. We will make a small stop here to collect our first win and move to the tech analysis of the second pair, which is British pound to US dollar. On this one we have a similar case as we had on our previous pair. We will invest in the price drop after the rollback. So let's switch to the broker and open a deal for 100 with 3-minute expiration time for the price decrease. And back to the trading view for more detailed tech analysis. At first, the price was in a flat on equal volumes, after moving into a sharp uptrend saturated with volumes from the buyers. Further, the sellers got down to business in a protracted downtrend with time-to-time corrections began. We are working with you in a correctional flat corridor, and we will invest in a continuation of the trend and break of the level. So let's get back to the broker. The second way involves working with news and fundamental analysis. Having studied the news, the economy, and financial data, we can identify potential entry points. Most often such trading is based on psychological levels. During the release of news, we observe a sharp price movement with a breakdown of one level or another. But having reached that very psychological minimum or maximum, the price reverses. Here it is necessary to look at the situation, working that neither is at the moment. By predicting the movement in its very inception, you can open a sufficiently large number of transactions, thereby multiplying profits at times. The third method of finding entry points is to use indicators such as moving average, Bollinger Bands, volumes, RSI, and others. Each indicator works according to its own algorithm and gives it signals to enter a trade. So the use of one is different from the other. Having studied the work of at least a few of them, you can simplify your analysis and work with less effort for more money. Choosing the right entry point is essential in trading because it can determine the success or failure of a trade. A good entry point can provide the trade with a better risk-reward ratio, while a bad entry point can increase risk and rob you of potential rewards. In addition to the success of your trade, the right entry point already determines your risks. It separates you from losses as it reduces potential losses and maximizes potential profits. By opening a trade in the right position at the right time, you can increase the likelihood of the price moving in your favor, resulting in more profit. Entering a trade too early or too late can result in missed opportunities or increased risk. Let's pause here and pick up our second win. And move to our last pair of the video, Swiss franc to Japanese yen. We will invest in the continuation of the price growth after the reversal from the support level. So let's switch to the broker and open a deal for 100 with 3-minute expiration time for the price increase. And back to the trading view. We are currently observing a mild bullish trend in this pair, which has now gained momentum due to increased buying volumes. That after changing the downtrend with a flat. We are working inside this flat for the reversal from the level and growth. Let's get back to the broker. So my YouTube channel and the open Telegram channel is not the only thing that I have. I offer a private channel exclusively for my team where you can learn from me and trade together with me. As a team member, you will receive personal mentorship, multiple trading sessions, individual feedback, and additional educational resources. If you are interested in joining my team, send me a message on my personal Telegram with the phrase "I want some honey," and I will send you an invitation to the team. You can find the link to contact me in the video description or in the pinned comment. It would seem surprising, but the right entry point also regulates your emotional state. On a subconscious level, by entering a trade at the right time, you avoid making impulsive decisions based on emotions and other noise. In the future, this saves you from overtrading and making wrong decisions. In conclusion, the entry point in trading refers to the price at which a position is opened. Based on a predetermined or calculated trading strategy, the ideal entry point is one that offers a low risk while providing the potential for high profits. By carefully analyzing market trends and using effective risk management strategies, traders can identify and capitalize on the best entry points for their trading positions. And one last thing about entry points. Before entering a trade, it is essential to define your risk to reward ratio, which is potential profit you could earn relative to the amount you are willing to risk. By having a defined risk to reward ratio, you can identify entry points that offer a high potential profit with limiting your potential losses. So let's collect our third win of the day. Thank you everyone for watching this video. Don't forget to subscribe to the channel, leave a like and drop a comment. See you in a while, have a good one. Bye.